Welcome back to Market on Close. I'm Caroline Woods filling in for Oliver Rennick. George Tsilis, senior markets correspondent, joins us now to take a closer look at Akamai's earnings. And George, I'm taking a closer look at the stock here, and it was already down heading into this report and adding to those losses. The fourth quarter looks pretty good, but the first quarter outlook, the current quarter outlook, looks pretty disappointing, and it seems like that's what investors are focusing on.
Yeah, definitely. If you look at the guidance, it was actually lower despite the fact that Akamai, which is one of these legacy companies in the technology stack, it's a content delivery network, essentially provides distribution of content across the internet. It's really in the edge cloud computing space, but I think some of the challenges for this business itself is competition. Cloudflare is actually SimpleNet, we've talked about on this program many times, is actually competing quite aggressively against Akamai, and they seem to be gaining market share. And I think that's still a problem for Akamai itself, despite being a legacy player in the media delivery space. But nonetheless, if you look at the EPS that they reported, it was actually quite good on the surface. They reported $1.66 adjusted earnings versus the estimates of $1.52. Now, again, that's still down slightly because last quarter, or for the same quarter last year, the company denoted or printed $1.69. So it was down about 1.7%. But if you look at the sales number, it did come in slightly higher, 1.02 billion versus 1.015 billion. So just a fractional beat with about a 6.8% increase. But of course, the culprit is for a company that has been growing rather modestly in the mid-single digits, both in sales and earnings, at least the last year, is the guidance. And if you look at the guidance, at least for the adjusted fiscal year 25, they're now coming in at the midpoint around $6.20, so somewhere between $6 and $6.40 on an adjusted EPS front. But if you look at the estimates, they were around $6.82. Also, sales came in down now from the midpoint around $4.26 billion for the fiscal year 25 versus the estimates at $4.26 billion. So in other words, they're coming down just slightly on EPS as well as revenues. But that's enough to essentially throw this one off, considering, like I said, if you just look at the growth in the business over the past year, it's been relatively flat to slightly higher at the mid-single digits. And I think their compute as well as server business, and server distribution business, security business as well, has been relatively modest. And I think the aspects of Akamai really are, not necessarily as a bad business, but I think it may not be adapting to the changing trends in high-speed AI and edge computing platforms that are needed, like are provided by Net, which is Cloudflare.
Yeah, I was going to ask you about that. The revenue growth, actually, the trailing numbers topped expectations, but 2.5% revenue growth doesn't seem all that impressive. How does that compare to some of the competitors?
Well, that's the thing. I mean, some of the competitors are obviously growing in the mid-teens to somewhere in the low 20% range, and so that's why you're seeing strong trends. Now, if you look at Akamai, and it was a great question to ask, because if you look at the last 3 years, the stock has been down about 3%. It really hasn't done anything. It's been in a trading range between 80 on the low end and about 120 on the high end. And that speaks to essentially some growth challenges that Akamai is facing, particularly as a sole business or idiosyncratic business. I think that really comes down to is the company needs to adapt to the changing demands for edge cloud computing. And obviously, some of the competitors have adapted quite aggressively. Like I said, Cloudflare seems to be the preeminent competitor to Akamai, which has been encroaching on their competitive moat that Akamai used to have. So, for what it's worth, if you just look at the earnings estimates on a forward basis, now they're adjusted to the downside, but prior to the release, the stock is trading around 16 times forward earnings. Historically, it's around 18 times, but its growth rate is actually about 30% less than its 5-year average. So I can see why the stock is down. Because of the fact that even though growth rates are down and valuation is down, that those two metrics are matching each other. And so in essence, mid-single digit growth will get you around a mid-teens forward multiple, and that's where we're at with Akamai.
Okay. All right. Well, let's see how that shapes up. It looks like it's going to be a down day tomorrow for Akamai unless the conference call turns it around. Thanks so much to George Tsilis, senior markets correspondent.